Welcome to another video. My name is Stu, and if you're curious on how your credit score is determined, then you are in the right place. Now in today's video, I'm going to cover the basics on how your credit score is calculated. So let's get started. First, what is your credit score and why is it important? Your credit score is basically a statistical number that is used to measure your credit worthiness. It's basically a snapshot of your personal debt history of a specific point in time. Now, this is what lenders look at to determine the likelihood that you'll pay them back their money. The credit score is a three-digit number that ranges between 300 and 850. The higher the credit score, the less of a risk you are to potential lenders. So now that you know what is a credit score, let's talk about some of the factors that influences your credit score. One of the things that influences your credit score is your payment history. Your payment history reflects if you pay your bills on time and if you miss payments. It also tells you how many days do you make your payments past the due date. Every time you miss a payment, it has a negative effect on your credit score, and your credit score will go down. Next is how much debt you owe your creditors. Having a high balance can lower your credit score. However, if you have smaller amounts, it can raise your credit score if you make your payments on time every month. Next is the length of your credit history. If you have a history of making timely payments on time, then that will raise your credit scores. Lenders also like to look at your credit history to review your payment patterns. Another thing that will influence your credit score is the types of accounts that you have. For example, installment loans, home loans, retail, and credit cards. Another thing that will influence your credit score is your recent credit history. So if you recently opened up a bunch of credit cards, some lenders might think that you're in financial trouble, and that can have a negative effect on your credit score. Your credit score is extremely important, and you should make every effort to protect your credit score. People who have higher credit scores are usually rewarded with more favorable terms and also lower interest rates on credit cards, home loans, or even car loans. If you have a lower credit score, it could affect you negatively because now lenders can charge you a higher interest rate on the money that they lend you. So now that you know some of the things that could influence your credit score, let's go over some quick tips on how to improve your credit score. One of the ways is to make more than the minimum payment. If it's possible for you to pay above and beyond the minimum payment, then you should make every effort to do that. This will improve your chances of paying off that debt much quicker. Next is to work out a payment plan. You should definitely contact your lender and try to negotiate that payment plan to try to reduce it to a lower amount. Another thing you can do is check your credit report for any erroneous errors. These are just some simple steps to empower you with good financial knowledge. Thank you for watching this video. If you like the content that I shared, please subscribe to my channel, leave a comment, or share this with somebody that you believe will benefit from this information. You can also hit that bell if you'd like to get an alert every single time I upload a new video. Thank you for watching, and I hope you join me for the next video.